advice that you would give to the traditional bankers that, listen, this is the wake-up moment for you. Think about the next 5 or 10 years. Some of them already know, but what would be that advice? And also on the other side, I'm not saying that all traditional banks will go away. Some of them will reinvent themselves. But what is your advice to the digital-only banks that have just received their licenses? What should be the 2 or 3 things they should be doing?
So I'll start with the first question, the advice to the sort of senior tenured bankers. I think there's still some of them that hold on to this view that they already have the customer. They sometimes think they have the trust.
And we go live. One topic that I think that's how we started interacting, Darren. My question is that traditional banks, for the first time, are facing real disruption in the sense that digital-only banks are becoming real, right? The customer adoption is high. There are already enough proof of concepts that exist. There are wallets, and the customers are like very much open to experiment the new things out there. What are the advice that you would give to the traditional bankers that, listen, this is the wake-up moment for you. Think about the next 5 or 10 years. Some of them already know, but what would be that advice? And also on the other side, I'm not saying that all traditional banks will go away. Some of them will reinvent themselves. But what is your advice to the digital-only banks that have just received their licenses? What should be the 2 or 3 things they should be doing?
So I'll start with the first question, the advice to the sort of senior tenured bankers. I think there's still some of them that hold on to this view that they already have the customer. They sometimes think they have the trust. I would argue that it's a mixed bag in the banking industry, and there are many existing customers that are really frustrated with their existing banks, but they stay out of it's easier to do nothing. They stay because they have commitments tied into that bank, whether it's a mortgage or their salary goes in there, etc. And in some markets, it's a bit harder to change than others. Some of them stay because they see these digital banks coming up, but they put their sort of secondary account there. They don't put their primary account there, so they put $1,000 into the new digital bank. But over time, they might move more. I guess my advice to that group of bankers is I don't think consumer behavior is going to go backwards. I have no clue what the future will hold in terms of what we will be demanding of our banks in 5 years. Really no clue. But what I can tell you is I don't think digital demands are going away. I don't think the pace of life for the average consumer in terms of our demands on our lives is going to get less. I think we're going to demand more of ourselves. Our jobs are going to continue to demand more of us. We're going to want to invest in our children and our health. And if you listen to me, you're going to invest in your well-being. And so I'm going to be time poor. I'm going to have little time to do banking. And so I want that to be super efficient. I want it to work perfectly almost all of the time. And I want the experience to be pretty good along with it. So I don't think this trend is going away. And so if you are an exec in an existing bank and you aren't on this journey of leaning into this and buying into this, I think you need to ask yourself, is that because you're at the end of your career and sort of don't want to, and you think it's going to take too long to get good at this potentially, which I sort of understand and respect, because if you're 2 years away from retirement, for example, do you really want to leap into wrapping your head around agile and cloud and digital ventures, etc.? I really do appreciate that. But at the same time, if you're doing the right thing for the bank and for the customers, you can help others to go on this journey. And I think if you haven't started it by now, it's late, but you can catch up, right? Because I think this is, to use the running analogy, this is a marathon, not a sprint. And you can still improve your own customer experience. I think people get obsessed with the competitors and the neobanks, for example, and the others that are nibbling at the various parts of the ecosystem. But if you're an existing bank, you could set yourself a target, almost like my marathon goal, I want to radically improve our customer experience with our lending products over the next 6 months. You can set yourself goals like that don't have to be wrapped around your competitors. I think it can be a fool's errand almost to kind of focus on what everybody else is doing, but focus on your business and do it better and see how you can do it differently. And so those are the things I would say for the kind of the existing businesses. The final thing I would say for the existing businesses is about a decade ago, Bill Gates said, maybe we don't need banks, we need banking. He's obviously a phenomenal guy and he's been right more than he's been wrong. I think in this instance, right now, we'd argue he had that prediction wasn't quite right because we haven't really seen a whole bunch of banks fall away. We've seen their results trend down and kind of net promoter score not trend particularly favorably. We've seen them go through tough times. We haven't really seen banks disappear. So at the moment, I'd say that's not quite true. But I think whether we need banks or not, we need them to be better. And what you'll see is people vote with their feet. And I think you'll see more customers move to digital products out of necessity, out of efficiency. Truthfully, I think the digital products at the moment, sometimes their unique selling point is really kind of tenuous and hard to spot for me. And sometimes it's just their experience is better, but the product and the interest rate and the actual product itself is not necessarily dramatically better. And I think it should be. But I think banks need to act now if they haven't acted already, because there could be this point where it's, you're past the point of return and then we will see banks disappear. And I think in the next 5 years, we will see a major bank disappear, because I think potentially they might even get bought out by a neobank with funding. Like how radical would that be? That it's almost like that would seem like a reverse takeover. But I think we're going to see something like that by a firm that
Sophie
has plenty.
Yeah.
Right.
Sophie. I mean, there are certain acquisitions that these neobanks are made in US and Europe. So that's alarming.
Yeah, so I think we'll see that. In terms of advice for the neobanks and the new digital banks, I think the first is it's a very exciting space, right? And I think it's another space where you could get caught up in the hype and believe your own hype. And I think it's a bit like, when we saw social media first come up, Facebook wasn't the first. Actually, there was MySpace and Friends Reunited and others before. So they didn't invent social media. And we forget about those firms now. When I say MySpace, people have to go back to their memory banks to remember these things. You need to be a certain age. I think we'll see many of these digital ventures come and go. And so I think you can't rest on your laurels and think you've arrived or you've achieved, or whether you have millions of monthly active users or not, don't use those things as vanity metrics, because you'll be guilty of the same complacency that maybe the traditional enterprises have found themselves in. So you've got to continually be pushing and looking for adjacent opportunities and putting the customer first. Ultimately, I look at some of these digital banking products and I've got to say some of them feel a little gimmicky. If I see one more thing on LinkedIn about a fancy colored card where I can have my photo on the card, that's just those things drive me nuts, because I'm not going to change bank because of the picture on my debit card, or those sorts of things. That, to me, they're gimmicky. I want to see a phenomenal experience, but I want to see better lending products. I want to see something that actually gives me some advice around how to manage my daily life touch points. I see a lot of gimmicky marketing around these digital banks, where you can have a debit card that's a fancy color, you can have your football team's logo on it, etc. I think that works to a point, but I think they need to do much, much better around their digital products. And I think their products need to be genuinely differentiated from a banking perspective. They need to offer better rates for interest, for example. They need to offer faster loans. They need to give access to SMEs that couldn't ordinarily get credit. That's the kind of products I'm expecting them to see. And we're seeing some of it, but I think there's a whole swathe of them that think customer experience and good marketing is enough. And so I think there's going to be massive consolidation there. I think some of them will disappear. Many of them will disappear, actually. I think there'll be some consolidation in terms of M&A activity. But we're seeing regulators hold them to account with these new licenses where they're saying, what's your path to profitability? And I think that's really, really good, because that forces them to get serious in a fairly short period of time about how they're going to drive banking revenues. We don't want social media revenues to be considered the measure of being a good digital bank, because I think it's interesting in terms of a business model, but we want you to be a good bank first and foremost. And then if you have other ways of generating revenue, that's great. I think we're seeing a kind of push for 5 years in Asia to become profitable. That's interesting because many of the unicorns we've seen, not banking, but just sort of general unicorns, they've typically pushed out their point of profitability to more like 10 years in some cases. So I don't know if the 5-year push is necessarily a good thing. We might be trying to do it too early. And I use the Amazon example again. If we'd forced Amazon to be profitable in the 5-year point, would they be the business they are today? And so I think it's this chicken and egg thing. We absolutely want to see a path to profitability because I think that's sustainable and healthy, and they'll make better decisions. We want to see real banking products rather than the sort of marketing ideas around these that capture people. Because I think when you do great marketing, but there's not a lot of substance, I think suddenly you get hot money and people come in and they're there for a period of time and then they go away again. So I don't think you get stickiness and loyalty. And I'd say finally, whilst it's great to stand up your venture with a completely different group of people that are born agile and know tech and are great with products, there's a phenomenal group of banking talent out there that have ran banks for all of our lives. And so don't dismiss that talent, because there'll be people that are ready to change in terms of their behaviors and just need the opportunity and just need some training and coaching. And so there'll be people in the risk function, in the technology function, in compliance, in product, that given half a chance will bring incredible value to your business and a kind of grown up, I've been there, seen it, done it set of experience that will be important to the regulators, but will be important as you scale out these digital businesses as well, whether it's cross region or different product opportunities or just a certain scale of growth. I deal with a bunch of digital firms in China and Southeast Asia that are getting to a tipping point now where they're really, really big. They're multi-billion-dollar firms, and suddenly now they need to put in what I call grown-up processes around how they're going to scale to the next stage of growth or into other markets. And so taking talent from the existing kind of enterprise market can actually help you a lot there, as long as you help them in turn with the mindset change and give them the time to change and learn in your organization.